Practice questions. 21 to 40. Which of the following is not an example of property insurance? A. Homeowners insurance. B. Auto insurance. C. Business property insurance. D. Professional liability insurance. Answer. D. Professional liability insurance. Explanation. Property insurance covers tangible assets like homes, vehicles, and businesses, while professional liability insurance covers legal claims against professionals. What is the main purpose of liability insurance? A. To cover damages to a policyholder's property. B. To compensate a policyholder for lost income. C. To cover legal responsibilities for causing harm or damage to others. D. To protect against speculative risks. Answer. C. To cover legal responsibilities for causing harm or damage to others. Explanation. Liability insurance helps cover legal costs and claims when a policyholder is responsible for third-party injuries or damages. What is an example of a non-proportional reinsurance agreement? A. The reinsurer pays a percentage of all claims. B. The insurer covers losses up to a certain limit, and the reinsurer covers the excess. C. The reinsurer handles all small claims, while the insurer covers large ones. D. The insurer and reinsurer split premiums equally. Answer. B. The insurer covers losses up to a certain limit, and the reinsurer covers the excess. Explanation. In non-proportional reinsurance, the primary insurer covers claims up to a set amount, and the reinsurer pays for anything beyond that. What is an example of a pure risk? A. Investing in stocks. B. Gambling at a casino. C. The possibility of a house fire. D. Starting a new business. Answer. C. The possibility of a house fire. Explanation. Pure risk involves only the possibility of loss, while speculative risk involves potential gain or loss. What is an example of risk avoidance? A. Installing security cameras to prevent theft. B. Not driving in hazardous weather conditions. C. Buying additional insurance coverage. D. Increasing insurance deductibles. Answer. B. Not driving in hazardous weather conditions. Explanation. Risk avoidance involves eliminating exposure to risk, such as avoiding dangerous areas or activities. Which factor is considered when determining an insurance premium? A. The policyholder's age. B. The type of coverage. C. The level of risk. D. All of the above. Answer. D. All of the above. Explanation. Insurers calculate premiums based on various factors, including age, coverage type, and risk assessment. What does facultative reinsurance involve? A. A long-term agreement covering all policies. B. The reinsurer automatically covering a portion of all claims. C. The reinsurer evaluating and accepting risks on a case-by-case basis. D. A government-mandated insurance policy. Answer. C. The reinsurer evaluating and accepting risks on a case-by-case basis. Explanation. Facultative reinsurance applies to individual high-value risks that are reviewed before coverage is granted. What is moral hazard in the context of insurance? A. The risk of natural disasters. B. A policyholder's increased risk-taking due to insurance coverage. C. A condition that increases the chance of loss. D. A type of property damage. Answer. B. A policyholder's increased risk-taking due to insurance coverage. Explanation. Moral hazard occurs when people behave recklessly because they know they are insured. What is an example of speculative risk? A. Buying car insurance. B. Opening a new business. C. Driving without a seatbelt. D. Losing money in a fire. Answer. B. Opening a new business. Explanation. Speculative risk involves both potential gain and loss, unlike insurable risks, which cover only potential loss. What is an example of a hazard in insurance? A. A fire burning down a house. B. Poor electrical wiring increasing the risk of fire. C. Receiving an insurance payout. D. A policyholder filing a fraudulent claim. Answer. B. Poor electrical wiring increasing the risk of fire. Explanation. Hazards increase the likelihood of a loss occurring, but are not direct causes of loss themselves. Which of the following describes treaty reinsurance? A. A one-time agreement for a specific risk. B. An ongoing agreement where the reinsurer covers a portfolio of risks. C. A method of self-insurance. D. Insurance fraud detection. Answer. B. An ongoing agreement where the reinsurer covers a portfolio of risks. Explanation. Treaty reinsurance involves long-term contracts where a reinsurer covers an insurer's risks under predefined terms. Which type of risk is insurable? A. Speculative risk. B. Gambling risk. C. Pure risk. D. Business investment risk. Answer. C. Pure risk. Explanation. Pure risks, which involve only the possibility of loss, e.g., fire, accidents, are insurable. Which type of insurance is designed to cover business losses due to employee dishonesty? A. Property insurance. B. Fidelity insurance. C. Life insurance. D. Health insurance. Answer. B. Fidelity insurance. Explanation. Fidelity insurance protects businesses against losses due to fraud or dishonesty by employees. What is an example of transferring risk? A. Saving money for emergencies. B. Purchasing an insurance policy. C. Ignoring potential risks. D. Accepting all financial risks personally. Answer. B. Purchasing an insurance policy. Explanation. Insurance transfers financial risk from the policyholder to the insurer in exchange for a premium. What does the principle of indemnity prevent? A. Insurers from denying claims. B. Policyholders from profiting from a loss. C. Insurers from charging high premiums. D. Policyholders from switching insurance providers. Answer. B. Policyholders from profiting from a loss. Explanation. Indemnity ensures insurance compensates only for actual losses, preventing financial gain from claims. What is an example of a personal risk? A. Losing a house in a fire. B. Job loss due to illness. C. A business suffering financial loss. D. Damage to a vehicle in an accident. Answer. B. Job loss due to illness. Explanation. Personal risk involves losses related to an individual's well-being, such as income loss due to illness. What does risk retention mean? A. Avoiding all risks. B. Self-insuring by accepting certain financial risks. C. Buying additional insurance. D. Eliminating risk entirely. Answer. B. Self-insuring by accepting certain financial risks. Explanation. Risk retention means a person or company assumes financial responsibility for certain losses instead of transferring them to an insurer. Why do insurers use reinsurance? A. To increase policyholder premiums. B. To reduce their financial exposure to large claims. C. To eliminate the need for customer service. D. To prevent policyholders from filing claims. Answer. B. To reduce their financial exposure to large claims. Explanation. Reinsurance allows insurers to share risks with other companies, ensuring financial stability in case of large claims. What does the term peril refer to in insurance? A. The uncertainty of loss. B. The cause of loss, such as fire or theft. C. The likelihood of risk increasing. D. The amount of insurance coverage. Answer: B. The cause of loss, such as fire or theft. Explanation: perils are events that directly cause losses, such as fires, floods, or accidents. What type of insurance is designed to cover damage caused by natural disasters? A. Life insurance. B. Auto insurance. C. Property insurance. D. Health insurance. Answer: C. Property insurance. Explanation: property insurance protects assets like homes and businesses against perils like earthquakes, floods, and fires.